Hi, it's Mitch from Reverse Mortgage Pros, and in this video, I want to discuss if reverse mortgage rates are really that high. Let's get started. So if you're new to my channel, I offer free professional help with your reverse mortgage decision. Hit the subscribe button below this video or the like button below this video to get more information and videos like this on reverse mortgages and help spread the word and educate people about reverse mortgages in Canada. So in this video, one of the most common reactions I see to reverse mortgages is that the rates are too high, and I wanted to discuss this and put out some information for you to answer some questions. So are they really that high is the first question. How do interest rates for reverse mortgage compare to other options out there? And how do interest rates for reverse mortgages now compare to where they've been over time? So I'm going to explore this topic in this video so you'll have the real facts and the education and everything you need as always to make an informed decision. Before I get into the details, as I do at the start of every video, I'm going to quickly walk you through what is a reverse mortgage in 20 seconds. It's a mortgage for homeowners 55 and over that doesn't require any repayment upfront. You can get 10 to 55% of your home value depending on your age, property, and location. You can take as much money as the lender will give you, but any existing mortgage must be paid off first or line of credit. And it's designed to help you tap into your home equity for retirement and to continue to live in your home for life. In this video, I'm going to discuss the question, are reverse mortgage rates really that high? And like I said, reverse mortgage rates are too high is a fairly common statement that I get from time to time. And what exactly does it mean though? High compared to what? What's considered a high interest rate and are they really that high? That's what I want to discuss in this video. So the answer to the question is it depends on what you compare them to if rates are really that high. If you compare them to what I'm going to call an A level mortgage, which are the mortgages that you need the best credit and the best income to qualify for, these are the lowest interest rate possible that you can get as an individual person in Canada, then yes, reverse mortgage rates are higher, usually around 1.5% to 2% higher than the best A level mortgage rates that you need excellent income and credit scores to get. But if you compare them to other products out there, so comparing them to the lowest possible product that you can get as an individual in Canada, they do appear to be a little high. But if you compare them to other products out there, the rate all of a sudden doesn't seem so high. So let's take a look at different products you can get as an individual borrower in Canada. And so what I've done is I've ordered them in this page from the highest rate at the top to the lowest rate at the bottom. So at the top, you've got things like credit cards, bank overdrafts, are all probably close to 20% interest rates. Then you've got personal loan or a personal unsecured line of credit. You're probably talking double digit, 10 to 15% in that range. Then you've got second mortgages or private B level mortgages. So if you don't have good income or good credit score, you're going to have to get some kind of B level mortgage or a second mortgage even. And those can vary over time, but are anything really between 7 and 15% in that range. Then you've got things like a car loan, and then of course at the bottom, a home equity line of credit and the top A level mortgages that I discussed. And you can see reverse mortgages fit right in around a car loan and home equity line of credit. They're actually very close to both those products. So sometimes reverse mortgage rate is higher than a car loan, sometimes lower. Sometimes reverse mortgage is higher than a home equity line of credit, sometimes lower. It kind of varies over time, but generally speaking, they're right around those two products. I would say they tend to be just higher than a home equity line of credit and just lower than a car loan. But again, you might look at that today and they might be lower than both of them and might be the second best option available. And then really the top A-level mortgage, which is, as I mentioned, that's the best lowest rate lending product you can get for anything as a personal individual in Canada. You'll never get a better rate than you can get on an A-level mortgage. So comparing them like that isn't really fair. This isn't a fair comparison because you need income and a good credit score to get many of these products, especially the A-level mortgage or home equity line of credit. So how do they compare if you take out all the products that you need good income for? Because most people who are looking for a reverse mortgage are retired and they don't have a job anymore. They don't have income coming in, or they're using their retirement benefits, government income, that kind of stuff. So what if you take out the products you can't really get at that age and that level of income? Well, once you do that, reverse mortgage is actually the best rate product on the market. So you still got things like credit cards and bank overdrafts at the top at higher rates. You probably can't get a personal loan or a line of credit anymore without income. So I've removed those. You can get second mortgages and B-level mortgages based on the equity in your home, the very little income that you do have. But the rates are going to be higher than a reverse mortgage, and you can still get car loans with very little income. But again, reverse mortgages tend to be lower than a car loan rate, although it does vary over time. And then there's reverse mortgages. So when you take out all the products available to you as an individual with limited income who doesn't work anymore and doesn't have regular income come in, reverse mortgages are now the best rate that you can get on the market for borrowing money. But even this is still not a fair comparison because all these other products require you to make payments, monthly payments for your car loan, monthly payments for your B mortgage, your private mortgage, whatever it is you borrow. And if you don't pay the credit card, the loan, the private mortgage, even the car loan, the lender that you borrowed money from is going to come after your home and your assets because they can to get their money back. With a reverse mortgage, there is no payment, so your home and assets are protected because there's no payment. There's nothing for you to default on and for the lender to come after you. And you get a better rate than all these products offer. So not only do you get better rate than all these products, but you have better protection in case something bad happens on the downside. Like your home is much better protected with a reverse mortgage than it is with any product that requires a repayment. Because if you miss that repayment, the lender will come after your home. So putting this into context and everything I just discussed in context, you can accurately say that reverse mortgages are higher rates than an A-rated A-level mortgage. No doubt about that, and that's never going to change. There's always going to be a premium to what is essentially, as I mentioned, the lowest borrowing product you can get on the market, and it will always probably be that way. But you can also accurately say that reverse mortgages are the lowest rate product on the market that isn't an A-rated A-level mortgage. So if you take out the one product that's the lowest on the market and always has and probably always will be, then actually reverse mortgages are the lowest rate product, the next best rate available to you. You can also say that reverse mortgage rates are the lowest rate product that doesn't require solid income to qualify for. So if you're retired and on much more limited income than when you were working and you don't have really strong income, then a reverse mortgage is actually the best rate that you can get to borrow money in Canada right now. So those are kind of some context to put it into. And then another piece of context to put rates into is how they compare over time. So at the time of making this video, interest rates had gone up. There was inflation, crisis, post-COVID pandemic. Bank of Canada had to raise interest rates very quickly, and then they've started to go off and come down again at the time of making this video. And what this can do is people can have a what if mindset, I call it, and not really put current interest rates in perspective. So you always just remember those really low rates that we had during COVID and right before COVID, and people forget what exactly happened to rates after that, before that, how really rates have performed over time, and how the current rates fit into the long-term interest rates that you've seen in Canada. So how do the current rates compare to historical rates in Canada? Well, here's a chart that is looking at the posted mortgage interest rates over time from an average of all the major banks over Canada. And I've circled where we are right now. Now, I challenge anybody out there to look at this chart and then tell me that interest rates are high. Because if you didn't live through the 1980s, 1990s, then somebody that's a bit younger might think that interest rates are high now, but interest rates now are almost laughably low to what interest rates used to be 40, 50, 30 years ago in Canada. And really, it'd be hard to look at that chart and say anything other than it's been a straight line downwards. Rates are still near historical lows, and rates on almost everything, not just reverse mortgage rates, regular mortgage rates, most products are still near historical 50-year lows. Now, are they at the absolute bottom and lowest they've ever been? No, but they're very near to the bottom and very near the lows. And really, I would say to anybody that says reverse mortgage rates are high, and thinking about comparing them to where rates have been over time, for the last 15 years, there hasn't really been any such thing as a high interest rate on a mortgage. We've lived through a period in the past 15 years of either low or extremely low rates. And I would say now we're no longer in the extremely low rate period, and we might never go back there again, but we're still in a low interest rate period. So thinking about other products, thinking about history, it's hard for me to agree with anybody that says reverse mortgage rates are high. So in summary, how I would put this and make you think about it is reverse mortgage interest rates are higher than the best mortgage rates out there, which are A-level mortgages, the lowest personal borrowing product you can get in Canada. But they're similar to the next level up, which is a home equity line of credit. However, both these products require solid income and a good credit score, and they also require payments, which you have to make or you'll lose your home. Now, when you remove the A-level mortgage product and the home equity line of credit, which even then reverse mortgage rates are close to, aside from these two products, reverse mortgage rates are actually among the best you can get, better than almost every product available, and certainly the best product you can get if you have limited income and you're retired and you don't have a regular income coming in anymore. Finally, as I showed, historically, reverse mortgage rates and all mortgage rates right now are still near all-time lows. And if you think about interest rates as high, medium, low, and extremely low, I'd say we've gone from extremely low to low in the past 5 years, but we're still not anywhere near medium or high level interest rates when you look at where interest rates have been in Canada over time. So this has given you hopefully something to think about, some context next time you hear somebody saying that reverse mortgage interest rates are too high. Now, if you are thinking about getting a reverse mortgage, you can get a free professional reverse mortgage assessment from me, and I'll advise you if it's a good solution for you, if something better works, where you can find the best rate, but not necessarily just the best initial rate, the best renewal rates, the best subsequent advance rates, and also making sure that you don't overpay on fees and all the other hidden costs. I'll show you a comparison of all your options with all the hidden costs, everything you need to know so you can decide which is the best product for you and if you want to do a reverse mortgage or not, or if it's a good fit for you. And there's no obligation. I'm not going to call you or do anything. I will send you an email with a comparison table, and that's what you're going to get from me. All this takes is 90 seconds. You can click the link in the video notes or go to ReverseMortgagePros.ca/assessment. That's ReverseMortgagePros.ca/assessment. Otherwise, I hope you enjoyed this video. If you have any questions or comments, I respond to every single comment, so feel free to leave it below this video and I will write you a response. Otherwise, I hope you enjoyed this. Thank you.